Hooty-hoo, all my stock market gamblers. Welcome today. The week is just getting started. It's Monday. Markets are open. It's March 15th. What have we got going on today? Well, the market started off pretty flat, but the Dow's starting to give some back right now. Down about 100 on the Dow. Nothing major. NASDAQ still about flat. What I want to talk today about is corrections and bear markets. Now, if let's say you're a millennial, let's say you're about, I don't know, let's call you early 30s. You've really never seen a bear market. Since 2008, we've been going straight up. Well, I mean, we're, a 13-year bull run, right? I mean, we haven't had a bear market. Now we've had a correction we had last March. A correction is, let's define those two terms. A correction is down between 10 and 20%. If the market drops between 10 and 20%, that's a correction. Okay, now a bear market is over 20%. All right, now a bear market happens about every 5 years. On average, about every 5 years in the stock market. We haven't had one for 13 years. You get these guys on YouTube, I love this, they're 28-year-old kids. They've never seen a bear market. They don't know what can happen. A bear market, a bear market's defined by over 20%. They last about a year, little over a year sometimes. But they're going to drop the market at least 20%. But we haven't had a bear market in 13 years. Now, why is that? Why haven't we had a bear market in 13 years? Because they're going to print money. They're printing about $5 trillion a year right now. Now, it's hard to have a bear market when you're putting $5 trillion into the stock market. Okay, that's where the money flows when they hand out the stimulus checks. It flows into the stock market. Now, according to Janet Yellen, who used to be the Fed chairman, who's now the head of the Treasury, she says we're never going to have a bear market ever again. I think she believes in MMT. We can just print our way out of a bear market. I got news for you. We're going to have a bear market eventually. And after a 13-year bull run, we're overdue. That's all I'm saying. We're overdue. I'm not calling for a market crash here. Matter of fact, I'm saying the market's going higher. As long as they keep printing $5 trillion a year, we're probably going to continue higher. But at some point, it will break. At some point, this won't last. Now, the cool thing about when we get a bear market, what happens? Well, there's companies that should not be companies. They have a bad business model. Their model is based upon corporate debt. They do not even make enough money to pay the interest on the corporate debt that they have now. So they don't make enough money to pay their interest. Well, how do they stay in business? Well, they borrow more money. They borrow the money from the Federal Reserve at very low interest rates, almost free, and these are what are called zombie companies. They should not be in business. They have a bad business model. Do we really need a business with a dog walking app that trades for $10 billion a year? I don't know. Maybe we do. But my point is these companies are not making money and they should not be in business. They should be flushed out. The bad companies should be flushed out. It's a bad use of our capital. Our capital should be flowing into good companies that make our lives better, that are productive, that create goods and services that we want and use, and they create them at a profit so that they can stay in business. So a bear market is not a bad thing. A bear market, like I say, it happens about every 5 years. And a bear market is always followed by a new bull market. We need to have a bear market, but they just won't let it happen. So what is this? This is very dangerous, in my opinion. Very dangerous because when we get the bear market, it's not going to be a 20%, 30%, or 40% crash. It could be an 80 or 90% crash because they haven't let us flush these companies out. A lot of these companies are going to get flushed out. They're going to go away. And this is going to create a huge crash in the stock market. Now, I'm not saying it's going to happen tomorrow. I'm not saying I am saying it might happen this year, and not for certain. They could print their way up, I guess, and maybe that'll work. I don't know. I'm not smart enough. I want to be smarter. I was an economics major in college. They never taught us about modern monetary theory. They never taught us about negative interest rates. Do I think interest rates will go negative? They probably will. Yes, I do believe that. You're going to put money in your bank and they're going to take your money. It sounds terrible, but that's the direction we're headed. I think the people at the top that are making the decisions are making some very bad choices. They're making the choices so that they can stay in power. They want to stay in power. They want to keep their jobs. They want to keep making the millions and millions of dollars. Why? They fleece the poor and the middle class. That happens. All right. So everyone knows that COVID is about over, right? I mean, we got the vaccines out there and the economy's going to keep booming. Well, maybe it's going to bounce right back to normal. I'm just not a big believer in that, but maybe we get this big rush that will send the stock market straight up. It's possible. I'm not saying that there's no chance of that happening. There is a chance of that happening. Okay, so there is a chance of the market just taking off straight up when the economy comes roaring back because we all been vaccinated. Well, that's a possibility. All right. But the possibility, I think, is small. I think we have to have a correction, at least, if not a full-blown bear market. Now, these corrections and these bear markets are a great time to put new money to work. They're a great time to put new money to work. What I'm saying to do here is to keep some of your powder dry so you have some money to enter the market if we get a correction, if we get that bear market, if we get a 40, 50, 60% pullback. It's a great time to put your money to work. Now, let me give you a system I use this is what I do with my mom's money. This is the most, what can I say, conservative. Not everybody's a trader like me. Not everybody's a stock market gambler. Okay, most hedge funds, most mutual funds, they do not even outperform the S&P 500 over a 5-year time period. Now, if you want to just invest your money and not trade your money, a very good system is to put your money in the SPY. The SPY is an index fund of the S&P 500. But here's the thing. There's two halves to each year in trading. Okay, so there's the good half of the year, which happens November 1st through May 1st. Now there's the bad half of the year, May 1st through the November 1st. Okay, when do most of the stock market crashes and the bear markets happen? They happen May 1st through November 1st. That's when the bear market comes in. That's where the pullbacks happen. That's where these opportunities come into play of these corrections in these bear markets. Well, we're coming up on May 1st. I mean, it's still over a month away. You got time. I think the market's still going to float higher, especially with those stimulus checks hitting your mailbox, hitting your bank accounts this past weekend, right? So everybody's got a stimulus check. They're going to put it into the Tesla. They're going to put it into these high flyers. But be careful. Be cautious. Have some dry powder available for the correction that's coming, for the bear market I think that's coming, and I think it's going to happen. I think we're going to get one of these corrections or bear markets somewhere between May 1st and November 1st. All right, now I know that's a 6-month period of time. If I knew exactly when it was going to happen, I could be incredibly wealthy. Now, I do like to take a shot on when it's going to happen, and that's where I do my gambling, a stock market gambler. I'm a chartologist. I look at charts to see when the crash is going to happen with stocks, particular stocks, or the whole market as a whole. But anyways, I look at charts for that, and I try to call the top, I try to call the bottom. But nobody can do that. Not me, not anybody. I'm telling you, they cannot. They'll tell you they can. They'll tell you they can. I love these millennial gurus on the YouTube channel. They never lose money. The market only goes up because they've never seen that bear market. Mark my words, a bear market's coming, and I think it's coming relatively soon. We've had that 13-year run. Keep some powder dry. I'm not saying don't trade this market. This market is a beautiful thing to trade. And I think it's going to float up higher from here with the stimulus checks. Yes, we might get a pullback. Might get a pullback this week. I'm hoping for a pullback so I can put some more money to work. But once we hit that May to November time zone, be careful this year. There's going to be a bear market coming, no matter what they're telling you on CNBC, no matter what the talking heads are saying, no matter what these financial gurus on YouTube tell you. There's going to be a bear market coming. Have some dry powder ready. Look I'm tall, Mike. I'm just a stock market gambler. Get out there, do some trading. Have a happy Monday. I hope this information was helpful. If it was, give me a thumbs up. If you really liked it, hit that subscribe button, and we'll talk again real soon. I'm Tall Mike. Bye-bye now.